Hello, in this video, we're going to be talking about the cost allocation and what it means in terms for property, plant, equipment, and intangible assets. In a prior chapter, we learned all about the amount that should be capitalized, meaning going recorded on the balance sheet for assets that are long-term assets that are revenue generating. And today in this video, we'll be talking how to allocate those costs over a specific period of time. So as I said, property, plant, equipment, and intangible assets, those are the long-term assets, are purchased with the expectation that they're going to provide future benefits. So that's why they're capitalized, which means, again, recording as an asset on the balance sheet, and they are revenue generating. So once you have those costs capitalized on the balance sheet, they then need to be allocated to periods benefited by their use. And the way that's done is they either are depreciated, and that's for the property, plant, and equipment. They get depleted through depletion for natural resources, or they get amortized, and that's for intangible asset. The method of depreciating, depleting, or amortizing is pretty similar, and it's just the term used for the different long-term assets, the PP&E, natural resources versus intangible assets. We'll note that the assets that are used in the manufacturing of a product, whether depreciation, depletion, or amortization, is going to be considered a product cost and included in the cost of inventory. And that means when we depreciate it or deplete it or amortize it, it's going to be part of the cost of goods sold on the income statement. If assets which we are allocating the cost for are not used in production, then this is considered to be a period cost and is reported as an operating expense on the income statement. In this whole chapter, we're going to be talking mainly about period costs. So let's talk about how these cost allocations. So again, the cost is, we're talking about the amount that was capitalized on the balance sheet. So here we have a company purchases a truck for $82,000 to deliver products to customers. The company estimates that 5 years from the acquisition date, the truck will be sold for $22,000. It is estimated then that $60,000 of the truck's purchase cost will be used up or consumed during the 5-year useful life. So here we have a truck that costs $82,000, right? And we feel like we can sell it for $22,000 at the end of 5 years, which is going to be its useful life. And so really the 60,000, I'll put this in quotes, is used up. This is the cost that we're going to allocate as we use the truck. We're going to expense it into our income statement. And there are really 3 different factors that we need to consider when we decide how to allocate or what to allocate the cost allocation. So the first factor that we need to consider is called the service life. The service life is going to be the amount of use that the company expects to obtain from an asset before it disposes of it. And it could be either a unit of time or activity, and we also call it useful life. So in our prior example for the delivery truck, we said that the useful life will be 5 years, because that's how long that the company expects to use it before they dispose of it. They can also allocate the cost of the truck in terms of units of activity. So if they decided to say, if a company determined that the delivery truck is useful for, it would be able to have 150,000 miles, then the cost could be allocated over the number of miles driven per year. Now, a service life is really what the company expects to utilize the asset over. There's also the physical life of an asset, which can be greater than the service life. So just because an asset is used up for accounting purposes, it doesn't mean it's no longer can be used ever. So the reasons for physical life to be greater than a service life, many reasons are due to technological change, right? We can use a computer maybe for 3 years, although its physical life, it might last 5 or 6 years. But because of the technology changing all the time, the service life would be shorter. And along with that, it's just if an asset is sold in a market that frequently demands new products, such as technology, so your service life might be shorter than the actual physical life. And when we're talking about natural resources, which there's a video on it from the previous chapter, the way the cost allocation goes is by how much a company consumes the natural resource. And so a company could consume more of natural resources, however, the cost benefit of it might not make sense. So the service life might be shorter than the actual physical life of that asset. There's also a couple of other reasons that a service life might be shorter than the physical life that you can just read on your own. So let's talk about the allocation base. And the base is the amount of the cost that we're going to allocate over the asset's service life. So this is the cost that we're either going to depreciate, deplete, or amortized. And it's going to be the initial value of the asset at its acquisition. And if you remember from previous chapter, the cost can be the purchase price plus various other things that are incurred to get the asset ready for its intended use. And so the allocation base is that total cost minus what's called residual value. It's also referred to as salvage value. Those terms are interchangeable. And the salvage value or residual value is the amount that the company expects to receive for the asset at the end of its service life, less any anticipated disposal cost. So most likely it's what does a company think that they might be able to sell that asset at the end of its service life. Now, estimating the residual value is very subjective and can be difficult due to many different things, including uncertainty about the future. So most companies don't really have a residual value for their assets, and they're most of the times assumed to be zero. The allocation method, there's various allocation methods, and a method the company should use should correspond to the pattern of benefits received from the assets used. So we'll go into that in a different video, all the different sort of allocation methods, and you'll see how the different methods correspond to different patterns of use or pattern benefits, or I should say how quickly the asset gets used up, like we discussed before. And the allocation approaches are going to be based on a time-based method, meaning like with the delivery truck, can it be over 5 years, or activity-based method, meaning over the number of miles the truck will generate over its lifetime.